Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Quantum, whose current price stands at the $162.9 mark, and here on TradingView the market is down by 0.67%. and in this video I want to give you the key scenarios that I expect to play out, basing my analysis on the Elliot wave structures, the Fibonacci's, the key areas of support and resistances, and also draw out any key chart patterns that you have information on this chart. And I'll kickstart the video by giving a brief of what has been happening on this chart. Quantum from the all-time high has been seeing no prices in this massive ABC corrective movement, which has now taken us back to around the $41.2 mark. And after seeing that low, we have been seeing a very nice bounce to the upper side in the movement that has been obeying the Elliot wave structures. And if I jump to the 4-hour chart so that I can show you those key Elliot wave structures right here, after making our low down there, we saw a very nice bounce to the upper side, seeing the formation of a first wave to the upper side, then a wave 2, then a wave 3, then I'm expecting a fourth wave, and then a fifth wave to the upper side to complete a higher Elliot wave count 1. And if I get a little bit into the details of the formation of this Elliot wave structure right here, after seeing the formation of a first wave to the upper side, we saw a very nice retracement to the lower side in the formation of a wave 2, and using the Fibonacci's, we can sketch out a minimum target area to the lower side in the formation of a wave 2 by connecting the Fibonacci's from the low of that wave 1 to the high of that first wave to the upper side, and that gives me a minimum retracement area between the fib level 0.382 and the fib level 0.618, and I can mark that target area here on the charts like that, and you can see we have retraced into that target area. And after making the low for that second wave, we saw a very nice bounce to the upper side in the formation of a wave 3, and using a trend based Fibonacci, we can get to see whether this wave 3 has done the minimum that we expected it to do in basing it on the trend based Fibonacci, connecting the fib from the low of that wave 1 to the high of that wave 1, and then dragging the Fibonacci's to the low of that second wave, and that gives me a minimum target area to the upper side at the fib level 1.618, and that is at around the $236.1 mark, and the high that we have over here in the formation of a third wave is at around the $229 mark, meaning we have a difference of like $10 difference between the high we have and the target area that we have sketched out using the trend based Fibonacci, meaning there are high chances that the high for that third wave to the upper side was in at around the $229 mark, and whatever we are seeing right now to the lower side is the formation of a fourth wave to the lower side. And because a fourth wave is a retracement of the third wave, we can use the Fibonacci's once more, connecting them from the low of that second wave to the high of that wave 3, and that gives me a minimum retracement area to the lower side in the formation of a wave 4 between the fib level 0.382 and the fib level 0.618, and that target area lies between the $175.2 mark and the $141.7 mark. And you can see Quantum has continued to respect this movement to the lower side, and because the fourth wave is a corrective wave, I also expected to see an ABC corrective movement play out over here, and I believe we have started to see such a structure, having this as the first wave, that is the wave A, then a wave B, then I'm expecting a low for that wave C. And you can see in this ABC corrective structure right here, we are yet to make a low for that wave C, and that low for that wave C, I'm expecting it to maybe fully maximize this target area that I have drawn out over here by maybe taking us back to around the $142 mark. It's not a must that we go back to around the $142 mark, but I need a low that is below the $158 mark. So once we make a low below the $158 mark, then there are high chances that the low might be in the formation of that fourth wave, and I can start sketching out a movement to the upper side in the formation of a fifth wave to the upper side. We also have another key chart pattern that is in formation right here in the formation of this fourth wave to the lower side, which is a triangle, and if I draw it out, we can have this as the upper side of that triangle. Then the baseline is down here, connecting these lows down here, and you can see that we have continued to push the price of Quantum to the apex of this triangle, and we have started to see a breakout here on the 4-hour chart, and this is a chart pattern that normally breaks to the lower side, having the target area of that breakout as the height of the triangle. So using a trend line once more, we can get that height, and then place it down here to give us a minimum target area to the lower side, back to around the $120.9 mark. And for me, the most important thing is having a breakout that is within this target area back to around the $142 mark. And once I see that, then I can start sketching out a movement to the upper side in the formation of a fifth wave to the upper side. It's not a must that we fully maximize this target area by trading back to around the $120 mark, so let's be patient and see how that plays out. Also, going back to the daily chart to show you another key chart pattern that was in formation right here. We had the formation of a head and shoulders pattern here, and we have seen a very nice breakout out of this head and shoulders pattern. And if I draw it out, we can have this as a left shoulder of that head and shoulders pattern. Then we have seen the formation of the head, then the neckline, then the right shoulder, and after that we saw a very nice breakout to the upper side, and we have continued pushing higher. And there is a possibility that this movement that is right here in the formation of a wave 4 might come down to try and have a retest of this neckline of that head and shoulders pattern, and the neckline is at around the $127 mark. And in case we see a breakout out of that triangle that I have drawn out, there's a possibility of us trading back to around the $127 mark before we see a very nice bounce to the upper side in the formation of that fifth wave to the upper side. Also, taking a look at the indicators, on the 4-hour RSI we are trading at around the 37 mark, meaning we have massive room for us to support any movement to the upper side, and also any movement to the lower side in the formation of that ABC corrective movement will still be supported before we get into the oversold region. Also, taking a look at the MACD, here on the MACD we have printed a bearish cross, and that means lower prices are coming our way. So let's be patient and see how that plays out, and I'll keep you updated.